These are the biggest tax changes in Canada for 2026. Some are going up, some are going down. Hey guys, it's Adrian here, the Canadian in a t-shirt. And today I'll break down the new limits for the TFSA, RRSP, and FHSA, changes to the CPP, capital gains tax, and updated tax rates and tax brackets. Let's jump in. Starting with the good news, the TFSA. Everyone is getting an extra $7,000 worth of contribution room, just like last year. More tax-free room to invest with. The TFSA is one of the best tools we have in Canada, and it benefits everyone. Please use it and invest in it right away. We gain this extra $7,000 of room on January 1st, but don't worry, even if you don't have the money, you don't lose it. That contribution room is carried forward, and everyone in Canada gets the same room. It doesn't depend on your income, only your age. Use this table to find your total TFSA room based on your age in the year 2026. If you were born in the year 1991 or earlier, meaning you'll be at least 35 this year, you'll have a total of $109,000 of contribution room. That's how much money you can put into your TFSA if you're starting from scratch. Looking at the bottom, if you were born in 2008, meaning you are turning 18 this year, you will have $7,000 worth of TFSA room. For new Canadians, this is important. You do not need to be a Canadian citizen or a permanent resident. As long as you live in Canada and have a valid social insurance number, you can open a TFSA account and start investing. However, you only start gaining TFSA room once you actually live in Canada and are at least 18 years old. Use this table to find your TFSA room based on when you moved here. If you're 40 years old, but you only moved to Canada in 2025, you don't get the full $109,000 of room. You would only have $14,000, the same as a 19-year-old. You earned $7,000 in 2025 when you moved here, and another $7,000 for 2026. Watch my TFSA playlist to learn the rules and use it the right way. For the RRSP, we also get extra contribution room for 2026, but this will depend on your income. Each year, your contribution room will grow by 18% of your earned income from the previous year. That includes your salary and net business income. It does not include investment income, no dividends or capital gains. So if you have a salary of $100,000, you'll earn 18% of that, or $18,000 worth of room. But that new room is capped at an annual limit. In 2026, this limit will be increased to $33,810. That's an extra $1,320 compared to last year. So good news, but it only benefits the high earners. You need to be making above $180,000 to get this higher limit. For the rest of us, our new room will be the regular 18% of our income. The RSP can be very powerful, but you have to use it the right way. Watch my RSP explain videos to learn how. If you're looking to buy your first home, please use the FHSA, the First Home Savings Account. It's so powerful. It combines the best benefits of both the TFSA and the RRSP. It's tax sheltered like the TFSA, and your contributions lower your tax bill, just like the RRSP. Maxing out the FHSA should be your top priority every single year. Same as last year, you'll get $8,000 of new room for the year with a lifetime limit of $40,000. But listen up, you only gain that room if you actually open an account. If you're buying a home in the next 15 years, make sure you open an FHSA before December 31st, even if you don't put any money in. That unused room, $8,000 for 2025, will be carried forward. So in 2026, you'll have a total room of $16,000. If you wait until January, you miss out, and you'll only have half the room. I cover a bunch of end of the year tax tips in these videos here. And check out my FHSA explain video for all the rules and how to open an account. I opened my FHSA with QUESTRADE. Link down below to get a $50 sign-up bonus. Now some bad news. Our CPP deductions in 2026 will increase. The Canada Pension Plan is a federal retirement plan we all pay into, except for Quebec. The CPP rates are unchanged, but the limits are increasing. So for higher incomes, you'll pay more out of your paycheck. Like last year, we now have a second level of CPP that kicks in if you make above $74,600. I won't go through the math. I already have a whole video breaking it down. But here's the bottom line. If you make less than $71,000, no changes for you. Above $71K, you'll pay a little more this year. For the higher incomes above $85,000, you're going to pay the maximum amount of CPP, $4,646. That's $216 more than last year, so an extra $8 off your paycheck. Not the end of the world, but be prepared. And if you're self-employed, you have to pay double, your half and your employer's half. No one likes paying more, but remember, this is your pension. When you retire, you'll receive this monthly income until you die. And yes, we are paying more than our parents' generation, but we'll receive more. The more you put in, the more you get. Back to the good news. For 2026, we'll all pay a little less in taxes, in two ways. First, we all get a tax cut of 1% on the lowest tax bracket, meaning we all pay 14%, down from 15%, on our first $58,523 of income. On that alone, you'll save about $20 per paycheck. I go through all the math in my tax cut video right here. The second change, the tax brackets have been expanded by 2% to adjust for inflation. That means that more of our income will be taxed at the lower tax brackets. Your first $58K is taxed at 14%. Then your next $58K in the second bracket is taxed at 20.5%, and so on. This way, lower income Canadians pay less in taxes as a percentage than higher incomes. So your first paycheck in January, you should see less taxes taken off compared to last year. Note, these numbers are only for federal taxes. There's also provincial taxes with their own brackets. More good news, the basic personal amount is also getting a boost of 2%. This is a tax credit which helps all Canadians. For 2026, the BPA will grow to $16,452. That means if you earn less than $16,000, you won't pay a single dollar in federal taxes. For everyone else, we get a tax credit. So bottom line, we don't get taxed on the first $16,000 of our income. If you have a very high income in the top two tax brackets, this credit will get clawed back. Don't worry, this won't affect you unless you make above $181,000. And even so, you still get a tax credit, just a little smaller. Remember back in 2024, they proposed an increase to capital gains tax for wealthy Canadians? Well, that's been scrapped. It's totally gone. If you want to understand the math behind it, watch my video here on capital gains. But again, nothing's changing, you don't have to worry. But if you're a business owner, they are adding a nice bump of $25,000 to the lifetime capital gains exemption. For 2026, this amount will be $1,275,000. Basically, if you sell your business, the first $1.275 million will be tax-free. Watch this video to see how it all works. Lots of changes this year, but bottom line, we should see a little more money in our paycheck. Higher incomes will pay more in CPP, but all of us pay less in taxes, so it should be a net positive. I'll be making an update to my pay stub breakdown. Stay tuned for that. For more tax savings, watch the rest of my Canadian tax guide, my silver color videos. Link down below. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.